Well, welcome everybody. I appreciate you joining us today. I am Liz Gantnier, and I am going to be your host for today's session. You may be wondering where in the world is Greg Fawcett, because he is usually our MC. Well, Greg is taking some much deserved personal time off to be with family and spend some vacation time. So Greg will be back for the next installment in January, but you're just going to have to deal with me today. I am a partner and a regional assurance quality leader for Forvis Mazars. I am in the professional standards group here, and I am all things accounting and auditing. I have been with probably every size CPA firm known to mankind, and I am just pleased to have you all join us today to talk about some of our topics. So let me see who our special guests are today. We have two special guests, both of whom are in the professional standards group here. And I'm going to start with Lindsay Oakley. Lindsay has a almost 20-year career, and she heads up our nonprofit education and public sector practice here in Forvis Mazars. She is our technical guru when it's all things related to government grants and single audit and those types of activities. She is the chairperson of the executive committee for the Government Audit Quality Center of the AICPA, and she's also on the Comptroller General's Advisory Council for Government Auditing Standards. So all things government auditing and accounting. So Lindsay, we are really pleased to have you with us. Thank you very much.
Thanks for having me. Happy to be here.
And our other special guest, take a long look at the picture on the screen, folks, because he is only able to join us by phone today. He is in that much demand. We have Mike Pallas, who is Managing Director in the Professional Standards Group, and he is all things IT audit and SOC reporting. He's had a very illustrious career, also working with many size firms, but also was a IT director at a Fortune 500 company. And he knows his stuff when it comes to how does IT impact the audit engagement and what should you be on the lookout for. So we're going to be talking later with Mike about SOC reports. Mike, I think you're on the phone, and we appreciate you being here.
Thanks for having me this morning, everyone, and look forward to having hopefully a good dialogue.
All right. Thank you so much, Mike. Appreciate you being here. So if you were paying attention to the lead in, it said you needed to be on here for 50 minutes and you need to answer 3 of the 4 polling questions. So we're going to start with our first polling question so that you can log in for your CPE. It says, have you decorated yet for Halloween? And your answer choices are A, of course, I love Halloween, or B, not Halloween so much per se, but I do have mums and pumpkins and hay bales on my porch. Or who the heck's got time for decorating? Maybe if I have time, but it is not looking good. Or perhaps you're in category D, which is Halloween decorating is not my thing, but maybe come Thanksgiving, I'll think about some seasonal decor. So in the spirit of Greg Fawcett, we started out with a happy polling question of non-technical nature. So we're going to leave that polling question up as everybody answers it. And if you've never joined us before, we usually have 3 segments in this webcast, where we start with looking back, things that have caught our attention over the last quarter. We then move into things that you need to be thinking about right now, and then we give you some food for thought at the very end. So look at that. Most of our people are decorating for Halloween. That's awesome. I'm probably more in the not my thing category, to be honest, but I love seeing all the decorations. So thanks everybody for that. So let's move into looking back. And I think, Lindsay, you are up first. Things that have caught your eye.
Yeah, so I think we're coming full circle on the pandemic funding. I think we knew this day would eventually get here. But, you know, as most of the pandemic funding has been spent at this point, we're seeing a significant uptick in the follow-up and the review from federal agencies and others, really focusing in on fraud, waste, and abuse of this funding and making sure it was spent in accordance with how it was intended to be spent by Congress. So just a lot of oversight that we expected would would come one day.
Okay, so you're going to talk more about that in your Here and Now segment. So we will move on to the second, what's caught our eye, which is my area. Across the profession and certainly across our firm, there has been an awful lot of chatter out there about sale-leaseback transactions. They are a very popular mechanism for freeing up cash flow, but there are some specific rules that you have to follow in order for them to qualify as a sale-leaseback. Now, in the old days, under the old standard, you had to defer the gain. Under the new standard, if you qualify as a sale-leaseback, you get to take the gain in on day one. So it's a very popular alternative. You keep the building because you're leasing it. You've sold the building, so you're out from underneath that risk. And you get the cash flow free up of the change in value of that building. And so it seems like a win-win-win, but to qualify, you've got to follow some pretty specific accounting requirements. And a lot of folks are not paying attention to that on the front end, and they are not involving their accountants or auditors on the front end to make sure that they are creating a transaction that qualifies. And there is nothing worse than to have entered into one of these transactions and find out after the fact that it didn't qualify for accounting purposes, and you have to unwind those very popular debits and credits of gain recognition. So watch out for that. The second thing that I have seen is there has also been an awful lot of people caught off guard by our conversation last quarter about who the accounting owner is for leasehold improvements. It doesn't really matter. Now, it matters, but it doesn't really matter how the cash flow is changing hands on the front end of these leases. What you could have happen is just more rent is being paid, for example, or a greater leasehold like tenant improvement allowance is occurring, but maybe it's not really the lessee's leasehold improvement. So again, 842 reminded us about paying attention to certain criteria about those leasehold improvements. So if you are consuming the majority of the useful life, then perhaps it is the lessee's leasehold improvement. If they have no alternative use to the lessor, then perhaps it is the lessee's leasehold improvement. But if you're installing drywall, and drywall could be used by the next tenant, and drywall lasts, I'm going to pick a number, 12 years, and you're only got a 3-year commitment here, that is maybe not the lessee's leasehold improvement, no matter how the cash flow is working. So be very careful about the accounting for leasehold improvements going forward. That has caught the attention of a lot of folks, not the least of which are the accountants and auditors. So pay attention to those. We're seeing an awful lot of activity. So Mike, I'm going to turn it over to you for what's caught your eye in the SOC world.
Thanks, Liz. Yeah, so we're going to talk a little bit about some of the things I've seen over the past, I'd say busy season area. And maybe some of you are doing now or you're looking at is maybe taking some of your applications or services. We kind of call it on-prem, which is on-premise, but maybe, if you hear your IT group or someone in management saying we're going to go to the cloud or we're going to, do something outside of our organization, that's where the service organizations typically come into play. And because of that, a lot of these service organizations have various reports they're issuing. We'll go into kind of describe those later, but there are different types of reports and what those services cover. So unfortunately, some of our clients, when they're going through this or we're looking at them, they've got the wrong SOC report in there. They may think and I'll throw one out there like a FISERV, there may be a report they think's relevant, but it's not really relevant to the systems or services that they are actually providing to you as the entity or the organization. So I think it's very, very important for organizations to really make sure they have the right SOC report as they're kind of either going out, taking their system off-prem and going to the cloud, knowing what they're looking for when they're making that assessment or doing their due diligence. The other thing we're seeing in there, and if you kind of can relate to it, is before maybe going to a service organization, everything was done in-house or on-premise, and now you're looking at a service organization to do part of that control work or processing off-site. But there's still going to be things for you to kind of make sure you have your hands on. You can't transfer responsibility of all your transaction processing, your services to an outside entity, there are some things you're going to do there. And that's what we kind of call complementary user entity controls, these CUECs, and I'll kind of touch on those a little bit later as well, but making sure you understand what those are when you're looking at, doing the arrangement with a service organization, as well as looking at that probably every year to make sure you know what you're accountable for, to make sure you're not missing something there, because the service organizations, I always say, well, maybe it takes you to the 20-yard line, but they're not going to, cover everything till you go to the goal line. There are always going to be something that you might have to look for there. So that's going to be an important area we'll talk about later. And then the last one, and this has come up recently, is just the timing of some of these reports. Some of them kind of, been delayed on getting out. Some of them are the actual periods. But when you talk about a bridge letter, that's kind of the gap period between, your actual year end and when that SOC report, end date might be. And some of these we're seeing in the marketplace being greater than 90 days. And I'll kind of share with you some of our insights and thoughts as auditors and as companies, how they're really assessing that, what you can actually do around that. So these are, I think, the three top things that I'm seeing out there, and we'll have some other, discussions on other items, but this is something that I've kind of really seen over the last several months here where companies are having some challenges.
Well, this is all very timely stuff. I don't think there's any client in the last year that hasn't been somewhere related to federal funding issues, whether through Paycheck Protection or through ERC. I don't think anybody hasn't been thinking about leases in some form or fashion. And lastly, SOC reports and outsourcing. Outsourcing is just happening more and more and more, and making sure you have the right SOC report and you don't get caught flat-footed at the very end. So I think these are really timely issues, and we're going to focus on two of these, the nonprofits and the SOC, since you guys are probably tired of me talking about leases over the last couple of years. So we're going to focus about nonprofits and SOC when we move into our next segment here of the here and now. So we have a polling question to kick off your area here, Lindsay. Did your organization receive any federal pandemic funding, PPP loan, ERC grants of various sorts and sizes? And your choices are, yeah, that we sure did, or no, we sure didn't, that wasn't our thing, or not sure, and I haven't heard anything about it, there's been no chatter in the hallway, or last, I'm not sure, but there was an awful lot of discussion around here. I'm just not sure what actually came of that. So we'll leave that polling question up. And Lindsay, why don't you start kicking us off of what's going on here in this space?
Sure. If you're part of an organization, I would be surprised if your organization didn't receive any sort of pandemic funding. There was, you'll see that there was a significant amount of funding. A lot of it went to individuals, but a significant portion went to businesses and nonprofit organizations, governments, healthcare organizations. So there's probably a very small percentage of organizations that probably didn't receive any type of funding. The areas that we had as auditors and accountants had significant discussions with clients is probably on the healthcare organizations. We had the Provider Relief Fund, and then school districts and higher education. Governments, and then the PPP loans went to all types of organizations, as well as the employer retention credits. So I'm a little bit surprised by the results that answered no, that the organization didn't, are probably the broadest would be the PPP loans and the employer retention credits, but interesting results, right? So, just to kind of take a step back and say, where did all the pandemic funding go? You can see here, it went to all different types of organizations and individuals and types of places. This is from a website. It's the Pandemic Oversight website. It is part of the money that Congress set aside to oversee the federal funding. So this is kind of their tracking of where that funding went. And when we take a step back and kind of come for full circle of where we've been and kind of where we are now, really, we don't like to go back and think of the beginning of the pandemic, but if we go back, I remember spending hours and hours trying to figure out, what's the accounting, for example, for a PPP loan? Is it considered to be debt, knowing that it was going to be forgiven in the future, or is it some sort of grant? And really, for that example in particular, it was kind of a organization decision, right? Did they view the loan as a grant, or did they view it as some sort of conditional contribution? Or did they view it as a loan? And if it was forgiven, then they would follow the debt forgiveness guidance. And, we just saw a lot of diversity, but it took us a while to get there. So all of this money kept flowing, and we kept kind of having to understand each type of funding and how it should be accounted for, and, how it should be audited. The other big one, is the employer retention credit. And I know that's continued to be an ongoing, as we see things evolve with this program of, who's eligible for it, who is going to actually get the money. A lot of organizations have filed several months ago, and what's the status of that? So that's kind of an area we continue to see evolve. As far as the accounting side, that there was a lot of questions, is this a reduction of payroll taxes? Is it a grant? I think, the industry kind of landed on it's probably a grant, and, you're getting a refund of taxes you owed. However, on the nonprofit side, for example, there's a lot of diversity of, there's conditions related to that, and has the organization met those conditions, and when should that revenue be recognized? And given the uncertainty of when these claims are going to get paid, is there consideration of, I don't think I'm going to get it, so I have an allowance against it. So, that's just all come to say there's a lot out there, and they're continue to evolve. And thinking back, the rules on some of this funding kept changing. The biggest one that I think of the rules kept changing was the Provider Relief Fund to healthcare organizations. So that went to dentist offices and hospitals and nursing homes. And, these went to organizations that probably haven't gotten any federal money before, and it just showed up in bank accounts. And so them trying to understand, what the purpose of it is, and all of the changes is really hard, especially for organizations that haven't had to comply with this before, and how are they actually meeting the requirements of the program that's required in the time period that those are required to be spent. So all in all, just a lot of examples out there to say it really takes a real understanding of the program, and making sure that you're not charging the same expense to your PPP loan that you're charging to the Provider Relief Fund, or other sorts of funding that you may have received as part of the pandemic funding.
Before we go to the next slide, I just wanted to weigh in that these numbers are really staggering. I mean, I knew it was a lot of money, but it's a lot of money. And it's across a lot of places, and the size of it is just staggering. $1 trillion in unemployment, and yet another 1 trillion just to individuals. I mean, just I don't know. It's pretty staggering. So
yeah, and just a lot of pressure in the system, right, to process those unemployment claims. And so it's not surprising that there's potentially a lot of fraud expected to be in some of these programs.
Yeah, well, there weren't a lot of great rules on the front end, and the rules sort of changed or evolved, or everybody's understanding evolved, and there weren't always, good actors in the system helping people, understand the rules either. So, okay, shall I move on to the next slide for you?
Yep. So I've when we have moved past kind of, the spending, and trying to understand what are the rules, and when can I recognize the revenue, and what kind of compliance audit do I have to have. I think we've finally gained an understanding of that. what we are seeing now is a lot of oversight of this funding. So I pulled some headlines from some of the head newspapers and other places where the federal agencies and other organizations are really focusing in on where the fraud, waste, and abuse of this $5 trillion occurred, and really trying to recoup that funding if there was bad actors, as Liz said. So again, they're really trying to focus on the fraud, waste, and abuse. And if there's a misunderstanding of something, then they're trying to, the federal agencies, I think, are trying to work with those. But this is a focus of Congress to make sure that these funds were used correctly, and if there are wrongdoers, that they expect those people and organizations to be punished. So as part of all of this $5 trillion, there was a piece of that that went to oversight. And so in response to having all of this funding go out, they set up a committee called the Pandemic Response Accountability Committee, or the PRAC. And really their job is to oversee this pandemic funding and making sure that it is spent correctly. And this is expected to go out even a few years past when all of this funding has gone out. So we expect that we'll continue to see a lot of enforcement actions. A couple of things that we're seeing. I know the employee retention credit is still a big topic for a lot of organizations. So when the IRS, obviously, when they started trying to oversee the ERC program, and their expectations of who would file for that was significantly higher than what they expected. They started seeing a lot of bad actors right there. There were some consultants out there giving some bad advice that organizations qualified for the credit when, under the government mandate for closure, when they were actually not, in fact, eligible. So there were potentially a lot of claims out there that were requested that they didn't actually meet those requirements. So in response to that, right, they opened this voluntary disclosure program really to give these organizations the opportunity to return the funds without significant penalty. So they stopped processing these claims for a while. They did restart processing claims in August, so just a few months ago. And they also opened a second voluntary disclosure program that is open through November 22nd, and that is for 2021 tax periods. So for 2020 tax periods, that availability is closed, but there is an option to send back any funds that have been received under 2021. In addition to that, they have allowed organizations to keep a 15% of what they requested as part of that voluntary disclosure. And that's really the piece that was probably paid to these consultants to help them file these. And so they're separately going after those organizations that the consultants and those, out there promoting to these organizations that they were eligible when they were in fact not. A lot of the uncertainty around whether entities were eligible for this is around the government mandate for the closures. And so again, those promoters were out there pushing that. The gross receipts test, which is the other options, was a little more straightforward. So I think the IRS is going to be focusing on the government mandate. And keep in mind that, there's a lot of FAQs out there that the IRS has published and on whether they actually meet the requirements. So for example, the OSHA closures, does not meet the requirement to be eligible for the program. Another area of oversight that we're seeing is on PPP loans. So there, according to the SBA, which is the agency that administered the PPP loan program, they think or estimating about 70,000 of PPP loans are probably fraudulent, is their kind of guesstimate. So, when they started really focusing on this, because this program's been closed for a bit, they were pulling those low-hanging fruits that were truly fraudulent. What we're seeing now is that enforcement trends suggest that the Department of Justice, which is the one kind of taking enforcement actions for this, have been focusing on the False Claims Act. And so centered on the applicant's technical compliance and for more complex rules and regulations. And so, they started with the low-hanging fruit, obviously, and now they're kind of getting into more of the nuances of the program and whether they were eligible. So we're seeing kind of them digging further into that. So again, we expect continued enforcement actions on these. And then, the other areas we're seeing is on the single audit side. So for governments and nonprofits, a lot of these grants were audited by auditors, and we did see a significant uptick in the amount of findings that we have related to this funding, right? Because again, a lot of this funding, the guidance was changing, and some of this, the documentation just doesn't exist of what the organization used it for. There was turnover, or it was COVID and everyone was just kind of scrambling. So we did see an uptick in those, and we are seeing the federal agencies kind of come back now and say, okay, you have these question costs. I would like repayment of those, or show me how this is not question costs. So again, we're just kind of seeing it come from all angles at this point. And we expect to continue to see this for a while. I think we can go to the next slide. So you may be thinking, okay, well, what do I need to do to make sure that if somebody comes knocking on my door and asking me, for information related to any of my pandemic funding, what do I need? And, it's going to be documentation of everything. Documentation that you didn't charge the same cost to multiple programs. You didn't charge your payroll expenses and payroll taxes to the PPP loan, and then turn around and request that same charge from the ERC program. Documentation of the detail of what you spent the funding on. If the program allowed you to use it for lost revenue, where's your lost revenue calculation? I will tell you what we're seeing is that we're 4 years out past when a lot of this funding came through, and there's been a lot of turnover since then, and people were working remotely. Maybe there wasn't a great document retention policy, and that history has just been lost. So if you don't have that information, I would encourage you to try to go back and recreate the wheel. I do expect, again, a lot of random investigations to occur in addition to, higher risk things. If you do have questionable things that maybe you are not, you don't know if you're in compliance or not, maybe contact legal counsel and say, do I have support for this, or do I need to try to figure out a way to get it repaid? Do a self-review of compliance, go through an internal review, determine whether you can prove that you have the support to keep all of the funding, and then prepare for possible outcomes. Are there, if there is some sort of questionable employee retention credit, PPP loan, do you have a way to, if you were required to, pay that back? And then also, keep the communication lines open between your accountants and your lawyers and your auditors and internally, and making sure that everyone is up to date on any sort of actions or investigations that you may be involved with.
So Lindsay, how frequently are we finding that a client has received funding that would be subject to single audit, but they don't realize that it's subject to single audit, and neither does their auditor for a variety of reasons. How frequently is that happening?
More than you would expect. So, I mentioned that the healthcare organizations that receive the PPP loan. So think of your dentist's office and your local nursing home that never have gotten federal money before. And there's a requirement not only for nonprofits and government organizations to have a single audit, but the for-profits were also required to have some sort of compliance audit. And what we are seeing is that HRSA, if these organizations did not file in the PRF reporting portal that was required by HRSA to report how these funds were spent, HRSA has now referred those organizations over to U.S. Treasury as their credit agency, and basically their position is that once it's been referred over to the credit agency or collection agency, they no longer are involved in that process, and it is very hard to negotiate with Treasury not to pay those funds back. So we are seeing an uptick, especially with those healthcare organizations where they were not aware that they needed to file, or the emails were going to someone else that person is no longer with the organization, or just flat out weren't aware. They don't have a financial statement audit. They didn't know they were required to have some sort of compliance audit as well.
Okay, so some of the questions may be, oh heck, did I get something and I'm required to have a single audit? So you want to catch that yourself, not wait to be told. Yeah.
And there, we've seen some small local governments that, again, just don't get this type of money. And so the Treasury is reaching out to say, by the way, we haven't got your single audit. You need to go out and get it. The problem is there's a lack of auditors right now, right, that specialize in doing this work. And so those small organizations that need that may have a hard time finding an auditor. So that's a challenge that we're having as well.
Okay. All right. Well, this is all great information. Thank you, Lindsay. I'm going to go on to our third polling question. And Michael, you might want to start getting yourself queued up here. Did your organization have a delay in getting a SOC report this year? Is your answer A, yes, we did have a delay? No, we did not. C, I am not sure. Or D, we have no need for a SOC report, so this is not applicable to me. So we'll leave that up while people are answering. And I'm going to turn it over to you, Mike, and let's talk about the various kinds of SOC reports. You mentioned earlier that there's a variety of kinds, and there's also a variety of types underneath those kinds. So let's hand it over to you, and we'll see these results, and then I'll move the slide. So take it away.
Thanks, Liz. Yeah, so kind of stepping back and thinking of the most common SOC reports, there's actually three. There's a SOC 3, but I'm not going to really get into that one. That one's really somewhat unique there. But the two most typical ones are a SOC 1 and a SOC 2, and luckily the names are pretty straightforward and simple to know the difference between the two. But if you think of a SOC 1, this is probably the most common SOC report that most organizations, will go to get some background on, the nature and significance of what actually that service organization is going to be doing. So if you're going to be outsourcing something to an outside service provider, you're typically going to want to get either a SOC 1 or SOC 2. And I would strongly encourage folks that are looking at, financial statement processing, looking at transaction reporting, really going towards that SOC 1. And the reason being is it's really meant to address those internal controls over financial reporting. That's actually stated in the opinion itself. And the intended audience for that SOC 1 is typically your auditor. When we say auditor, that's typically your external auditor, because it's going to kind of touch on the various components of that financial statement audit. If you're looking at completeness of information coming through, the integrity of that information you're processing. Let's say, they're actually taking certain transactions. If it's, a lot of the things that we look at are banks where they're kind of processing your daily, deposits, loan information, doing your daily interest accruals, things of that nature. You're relying on that service organization to make sure that information is processed completely and accurately. So within that SOC 1, there are things called control objectives. And those control objectives, one would typically be the completeness and accuracy of that interest calculation. And so a lot of the things when you're reading through that SOC report will be objective by objective level. And it's something that I think is very, hopefully easy for people to comprehend. The opposite of a control objective is a risk. So, for example, a risk might be, is access to our customer data or system data, restricted to that employee's job responsibility? Is it commensurate with what that person should be doing? So a lot of these SOC 1 reports will hit on that objective or that risk doing a control objective. And then there'll be testing within that SOC report to make sure that that entity is actually, has the controls design, as well as we're looking at a type 2, which I'll get into a little later, is operating effectively. So if you think of a SOC 1, I think the main thing is, think about financial reporting risk. That's where your SOC 1 will kind of play into. Now, your SOC 2 is a little bit different. That's broader scale, and I'd say that's probably more centric around a lot of the IT or non-financial type of risk. So you're looking at, security, availability, privacy, confidentiality, and things of that nature. And that is typically not really as part of a financial audit. You would not really go towards getting a SOC 2 report. So there are service organizations out there that will do both the SOC 1 to cover themselves from a financial reporting perspective for those user organizations, as well as a SOC 2 to maybe look at some of the other things that they're doing for that organization from a process integrity standpoint. The one control objective or area I'd say is that kind of overlaps the two is that security piece. So in the event an organization does not have a SOC 1, a lot of times the organization, the financial auditors, will actually look for that SOC 2 and get some comfort on that one, and in the SOC 2, they're called trust criteria versus control objective, but they typically address the same risk as who has access and is that access appropriate. And then for those other objectives you might want to have, you really can't go to the SOC 2 for that. That is something you're going to, as a user organization, going to have to get an understanding of is how is that risk being addressed internally, or do you need to put some pressure on that service organization to actually prepare and provide to you a SOC 1? Stakeholders here are a little bit different on a SOC 2. You're not just going to have the auditor-auditor communication. You're also going to have, business partners, customers, regulators looking at certain type of criteria there that they're going to be, wanting to see. And this is one I think typically when you're taking customer information, and let's say you're on premise now, but you're going to outsource something. And part of that is customer information. A lot of organizations are going to make sure that if that's not hosted internally or kept internally, we're going to put that to an outside provider. How do we know that the integrity of the information from a privacy perspective is not compromised? Can that service organization give us some comfort that they are addressing various privacy criteria, or they call it trust criteria? So that SOC 2 will typically cover that. So if you're looking at some of the stuff beyond the financial audit and want to get comfort on where's that customer data going to reside on, what's around there from a confidentiality standpoint, from a privacy standpoint, and privacy, unlike financial audit, we're kind of going down the path of when that data is, basically collected, when it's, moved around, and when it's destroyed. So a lot of times when you're thinking of privacy, it's not just the initial creation of that customer data, but how do we make sure that customer data is no longer within that service organization once that customer leaves. So you probably want to go to a SOC 2 for that. Beyond that, I think they're very similar from a standpoint of looking at risk. Again, SOC 1 being more control objective driven, and then the SOC 2 really being driven by trust criteria. That's just how they kind of map that out. Now, we kind of did this in a short time frame here, but the things to consider is when would I really need a SOC report? And I think we all would say as part of our financial audit, if we're outsourcing something to a service organization, I think it's going to be key for the organization to really understand what is owned by that service organization. What are they doing on your behalf? So you want to understand the nature and significance of those services being offered. Some may be material, some may not. And I think reading that SOC report and making that assessment is going to be pretty critical to understand where risk stays within your organization or where that service organization should really be taking more ownership for how they're helping ensure that process integrity. The other thing that's come to mind here is, and we call them, information produced by the entity. You can call that key reports. If you're outsourcing something to a service organization and they have an application that's part of that, you're probably relying on certain reports coming off that system. And if someone asks you how you know it's complete and accurate, you're going to probably say, well, I know that service organization's covering it. And typically that could be found in the SOC report where they're going to say, we've tested, a test of 1 over the completeness and accuracy of that report. So we as a user organization can rely on that. So that's a typical time where if you're looking at various reports coming off from that service organization, you probably could get some benefit by getting that SOC 1 report to we call it place reliance on that service organization for the completeness and accuracy of any kind of report coming off the service they're providing, as it's mentioned in the SOC report. So those are probably the two, I'd say, highest areas of why you need a SOC report. And then the third one, which we kind of call vendor risk management, and this kind of think of this as maybe before you even go out there and you're going to, outsource something, you probably want to do some due diligence. So part of that would be getting a SOC report to really look at what risk are you taking on as an organization once you outsource, because once it's in your walls, you kind of know what's happening with IT. You kind of know what's happening with the data around it. But once you outsource it, you really should get some understanding of how is that service organization going to handle some of that data. And I think it's key to make sure, we kind of think through that piece of it. So those are kind of, I think, the 3 areas, Liz, that I think, folks should be considering when they need a SOC report. You can go to the next slide.
Yeah, and it doesn't matter, Mike, right, whether or not you're opining on internal control or testing internal control. You still have to understand process. So SOC reports are still important to understand what's been outsourced and what the process is and what your client needs to do. So I think some people think this is only applicable if you're testing internal control, and that's not always the case. Am I right?
Correct. Yes, Liz. And I think it's, think about it as when you're, understanding your own organization, how the processes are being done, how data is being handled, or, how we're handling, various issues around change management, around, access, who has elevated access, how are things, happening with an organization. Well, if you're outsourcing it, you should make sure you're comfortable with that same level of integrity by that service organization. So the only way you can really do that, luckily, is through a SOC report. And the SOC report really allows multiple user organizations to go to one report versus each time, let's say, a service organization has 50 different customers, you could have 50 auditors going in there. The service audit report really helps you cover that and provide that understanding to that organization. So it's an effective way to kind of share, test once, assess many for different organizations.
Okay, so let's move on to the types.
Yeah, so kind of looking at, I'm not kind of go brief here, but a type 1 and a type 2, it's pretty simple here. A type 1 is going to be more over the design. You're really focusing on the design and implementation of control. So if a control, you kind of step back, as we kind of talked earlier, is a SOC 1 is going to have control objectives. And what you're saying here is, were controls identified and implemented to achieve that control objective? So it's kind of a point in time test. You're not testing over a period of time. It's as of a certain date to give you, the reader or the organization, that yes, that service organization has control procedures that address those control objectives, i.e. risk. So that's where the type 1 kind of comes into play. And then usually the type 2, which gives you better, I think, greater comfort, is testing those controls over a period of time for operating effectiveness. So type 1, that control was designed and implemented. Type 2 is telling the reader that control has operated throughout a period of time, maybe 6 months, a year. So it gives you greater assurance of what actually is being covered. So ultimately, it's fine to get a type 1 as a point in time to get understanding, but once you start looking at getting more assurance on what's being done by the service organization, a type 2 is going to be more relevant for your purposes. And so I think we kind of go a little bit here on the SOC bridge letters, though keep that in mind too, is if you got a SOC report, and let's say we were a calendar year-end organization, 12/30, and the SOC report comes out as of 9/30, so it's going to cover a 9-month period, you typically want to get coverage that nothing's changed from your year-end to the examination end date of that SOC report. So this is typically called a bridge letter or gap letter. It's going to cover that period that was not covered under that SOC report. And one of the things I just kind of wanted to mention here, because it's a pretty straightforward concept, is a lot of organizations are trying to get comfort on something beyond 90 days, and you're kind of taking on more risk because once you go beyond 90 days or 3 months, that's pretty much a long period of time where something could have gone amok at that service organization, and you're trying to get comfort on something that's somewhat, I call, stale. So ideally, when you're looking at a SOC report, that sweet spot is that 90-day period. So if you got something coming out, as of September 30th, as of October, November, it's going to give you better comfort during your audit period that the controls have been placed in operation and are operating effectively. And this comes, again, more into play for those type 2 reports that covering a period of time where a SOC 1 would just be as a point in time. So just something to think about when you're going. And so getting the SOC report alone is not going to be enough. You need to get that bridge letter. So let's just touch a little bit here on what you should be looking for when you evaluate a SOC report. So beyond looking at who the service auditor is, beyond looking at some of the other things, I think there's kind of 4 key things you want to kind of focus on here. And one is, do you really understand the nature of the service provided and what maybe data centers or operating centers are covered? Because some of these service organizations have multiple operating facilities, and you may be, for example, having your data processed in Dallas, but then you also have a Denver location and maybe Atlanta location. That SOC report may not cover all locations. So you got to kind of step back when you're making these arrangements and understand where does that SOC report cover your specific location, because if it doesn't, the SOC report's not going to do much for you. You got to make sure you have the right location covered. And the services too is a lot of these service organizations offer multiple services. Maybe all those have not been agreed to by you. You might say, well, we're not going to take on those services. There's only be a limited amount, or maybe something different that you wanted included, but the SOC report's not going to cover it. So you got to make sure you're covering that through other means if you're going to place any reliance on that service organization. We kind of talked about key reports earlier. So as I mentioned, a lot of times SOC reports will cover that, but you got to make sure that you really, those reports themselves are actually listed in that SOC report for you to get any comfort over that. Period covered, we talked about that a little bit with the gap period. So if you got something, that came out in March and you're a calendar year end, that's probably not the best period. You're probably going to get something beyond that to get some comfort on what that service organization is doing. And then the last one, which is probably the most important, is having a clean or unqualified opinion. If something's qualified, it's going to really be for a SOC 1 at the control objective level. So that's going to tell you as the user that risk has not been addressed, and you as part of management probably need to understand how's that going to impact your organization, be it accounting records, be it processing of transactions, any financial reporting impact that could have on your organization as you kind of wrap up your year, and what you need to do maybe to compensate for that internally, be some of the kind of monitoring controls, whatever that might be to help things out. So I think the others are the user control considerations. That's something that we kind of touched on a little bit, is just making sure you're understanding that and mapping that to your internal controls. And then the last one, which we're not going to have a lot of time to talk about here, is these self-service organizations, which are where the service organization has outsourced other services to a third party. That might be physical security, it could be co-location, it might be managed security services, different type of services where that entity itself is now outsourced to a third party. So maybe, I know we're kind of running out of time here, Liz, but going to the next slide here is really, that's kind of what you would do as a user organization. Now, what would the auditors look at? So I kind of try to map these against each other. And I think the items in red here are really the key things that I think you should be aware of, is where is the the financial audit, the external audit, are really going to put a lot of focus on. And it's going to, the big one is these standard reports. Is a lot of times I think organizations thought that, oh, we got a SOC report, we can rely on every report coming off that system. And that's not true. I think you really got to make sure that those reports have been identified in the SOC report itself, or it's in the user manual or somewhere where they specifically call out those SOC reports. So your external auditors may challenge you on that if you say, well, we're relying on a SOC report, but this report has not been identified within that SOC report specifically itself. The other one is, as we kind of talked about, is the bridge letter, where, the length of period was probably farther. It's kind of more stale than you would typically look for in a bridge letter. So there might be need for more conversation with the service auditor and the service organization, maybe some other evidence you need to obtain. So you can rely on what that service organization has done beyond that 90-day period. The second one here on CUECs is really making sure that you have mapped these out. So the service organization is covering what they've done as part of their SOC report, but then there's things you need to make sure you're being accountable for, and these are called those complementary user entity controls. And what the external auditor is going to look for here is really making sure you have mapped those out to specific controls within your organization, and you've tested the operating effectiveness of it. So it's going to kind of be, making sure not that those were placed in operation, but they're operating effectively. If you're going to kind of look at controls and rely on controls, this is something you would need to do if you're taking a kind of control-based audit, or saying we're going to rely on the overall processing of that SOC report. The last one here is just, kind of if something would come into play for, like, you got a qualified opinion, and let's say, there's something that would be handled by a third party. Typically, what we're looking for here is the services that are being offered. So if you mentioned physical security, you got backup recovery, those are probably not as in scope, I would say, for a complementary service organization, or we call them SSOs, sub-service organization controls. But if you're talking about managed security services or release management, like who's taking care of changes for applications known in that SOC report, those would typically be in scope for the SOC. So we would probably want to make sure we obtain those SOC reports as well to get an understanding of what's being done. How is our service organization monitoring what that sub-service organization is actually doing? So again, we unfortunately have a lot of time to talk about this, but this is, I think, an area that you need to make sure you have a clear understanding of, as well as with your external auditors, on how you're going to cover that. So I think that kind of capitalized those areas, Liz, on what should be looked at.
This is all great information, Mike, and you've got a lot of questions in the queue, which tells me we need to invite you back and do a little deeper dive on some of the things. And Lindsay, you've got a bunch of questions in the queue also. So again, two really hot and interesting topics today. I appreciate that very much. So we're going to move on to our last segment, the conversations you should be having in the few minutes we have left, of things that are on the horizon to pay attention to. And as always, we end with a polling question. If you would like to follow up with anybody on, or have someone follow up with you on any of these things, we do download all the questions and we do take a look at them and try to get back to you on those that weren't answered during the session. So thank you for those. So what's on the horizon? I'm going to start off on a common theme I think that we've heard today about internal control over financial reporting. And I would just send a message to everybody out there to shore those things up, relook at them between remote work and talent shortages and turnover and new technologies and very complex transactions and complex accounting and instructions to legislation that have changed over time, and decision trees that all lead to, unfortunately, material misstatements and material weaknesses in internal control. So a lot has changed in the world over the last 5 years. Your internal controls should have changed along with them. If that isn't happening, I think you need to take another look. So Lindsay, I'll take it over to you.
Yeah, we're going to have a common theme here. So I have a comment on internal controls too. That's the first question that these federal agencies are going to come in is, what were your internal controls over how you spent this federal money, and what do you have to show to document all of that? So, a common theme of document and consider and put controls in place and make sure you have it all buttoned up.
And Mike, we'll send it to you for last word.
Yeah. Thanks, guys. And again, keeping the theme of controls, what we're looking at here is we're seeing more and more of these SOC reports being qualified. And the reason being is a lot of times you'll see testing exceptions in those SOC reports where the service auditor will call out that this control, has some exceptions. And a lot of times the managed response of that, or the service organization, is saying, yeah, we understand that. We're going to address it next year. We're going to kick the can down the road. And that's causing some risk out there because it's not really truly addressing that objective or risk. So more and more service auditors are now saying, well, we couldn't really get there. We're going to qualify that report. And then you as a user of that report are now going to have to think through, well, that objective or risk is not being met. How can I, as a user organization, really identify complementary controls that could address that risk? So there's definitely something that I think we're going to see out there and be prepared to respond to. And if that, that's probably discussion with your, hopefully with your external financial auditors, and probably a call with the service organization to understand, things you could do to help address that risk. So that's pretty much it, Liz.
Well, thank you to my two fabulous presenters, Lindsay and Mike. And Mike, hopefully next time we'll be able to see you in person, but we sure appreciate you calling in today. And we know everyone listening and our presenters are busy, so we just appreciate everybody's time commitment. There are some foresights out there that you might want to take a look at. The materials have some links for you on SOC, on accounting relief for private companies and nonprofits, and some SEC related matters in that first one. And maybe last but not least, our next and final installment for the 2024 Perspective Series is January 9th. And Greg is threatening to stay on vacation, and he is not going to be allowed to do that. So I am sure you will see him back January 9th. And we appreciate all of you for joining us and for your support of Forvis Mazars. And with that, I bid you adieu, and everyone have a wonderful day. Thank you very much.